Hello, everyone. Welcome to another episode of Trading Bitcoin with your host, Tone Vase. I've been doing a couple of videos from the woods. We did the whole options workshop this past weekend. Wow, I'm so glad this week is finally over, and now it's time to get back to work of planning events and more consistent YouTube channels. So sticking with the usual format or the new format, we do have another guest that I'm bringing you, another trader out of Australia. Let's welcome Trader Cobb to the show. Hey, buddy.
G'day, mate. How are you?
Cobb and I met in Australia when I was out there, when I was out in Sydney teaching the trading workshop there. Thanks for taking me out for a steak, man. That was great.
Mate, the steak wasn't the issue. It was what we did after that was the thing that made me feel so bad the next day. But it was good fun. Good fun.
Yeah. I kind of barely remember that. Man, one of these days I'm going to take a break from drinking and I'm going to see what the hell that's like. But for now, life and fun goes on. All right. So why don't you tell us a little bit about yourself? And I'll be doing screen share of, and all of Trader Cobb's links are in the video description, YouTube, Twitter, website. So give us a little bit of your background. And what's very important to me, and the thing that I ask about, I really want to know your trading experience before Bitcoin, and how did you start in your trading career, and then how did you transition into Bitcoin?
Yeah, sure, mate. Look, I've been trading for 13 years. It's pretty much in my professional life the only thing I really know, to be fair. I sort of started buying shares when I was 16, pretty young to get into that sort of area, and moved to London. I did a round the world trip, moved to London, and spent a lot of money and met a girl, and stuck around London for a bit, and basically just got into trading from there. The weird thing is though, is like I never thought that. I used to think that I wanted to be a stockbroker, not a trader. But then I realized that, what I actually wanted to be was a trader. It didn't, that's just the way things worked out, that I thought that a stockbroker was a trader when I was younger. So I started trading equities in the UK, FTSE 350 stocks, and end of day sort of stuff. And over about 18 months, I blew out 3 accounts, about £3,000 per account. This was back when the Australian dollar was about $2.60 to the pound. So that's a ton of money for me back then. I was 20.
You know what? That's actually not surprising. Like, I've never met like a trader that I respected that didn't at one point make some horrible mistakes, learn from them, and came back much better. It always scares me when I see people become like awesome traders out of the gate. And man, if you don't blow up an account early, you're gonna blow up an account late, and that is so much worse.
It's like, I'm with you on that too, man. Like, a lot of the mentors that I've worked with, I've been very fortunate, Tone. I've been able to work with a lot of great people across London, across Europe, New Zealand, Australia, in New York. I met some amazing people over there, all traditional traders, and I was able to work with them, meet them, learn from them. And the thing is, if you blow accounts out early, whether you're as thick as I was, which required 3 accounts to blow out, or you work it out pretty quickly. Trading is all about risk management, and there's really nothing more to it. You have to manage your risk. It's the most important thing you do, because you can be on a hot streak for a long time, but eventually something's going to happen, and eventually it's you're going to have to learn that lesson. So look, I traded in London for a number of years, moved back to Australia about 7 years ago. I've been trading full time for about nine years now. Worked with the New York Stock Exchange, ICE, CMC Markets, TradeStation, Argo Futures. I've worked with a lot of big traditional brands, massive names in the trading space. So, again, I've been out on the professional side of it. I've been on the trading side of it. I've had my own fund over in London. I started a fund when I was quite young, and effectively, I really, tell the truth is, mate, I got bored of trading. I really, really got bored of trading foreign exchange, bonds, stocks, commodities. And I actually moved away from trading for about 12 months. People say, and this is what I used to always get all the time. Well, if you're making so much money from it, why would you not do it? And it's true. Like, people often think that money is the only sort of plan that you're after. And I was doing well. I am doing well. I was doing well then, but I just got so mind-numbingly bored of it because I was doing it by myself. and you're sitting in front of all these screens all the time, and it's just not. Once you have done well with trading, there's something about sitting like dedicating your life to sitting in front of computer screens that, for me, it just didn't sort of float my boat. So I went and started doing some property stuff and bits and pieces. Came back into this market in July. Came into the crypto space in July of 2017. It was brought to my attention by a mentor of mine, a business mentor, and he said, "Cobby, you got to check this crypto stuff out." And I'm like, "Oh, right, what's this all about?" Because I was introduced in 2013, but I was like, "This is all just funny internet money type thing," you know what I mean? And I looked at the charts, and holy crap, it was all there. You know, it came to life. There was leverage trading. There was reasonable charts. I mean, you know as well as I do, mate, that trading via the platforms that we look to use quite frequently. I can see them on your tabs there. They're pretty subpar compared to something like TradeStation or something like that. But the volatility is insane. And the question you asked about transitioning into this market, it was really easy for me. I usually spend 2 months learning about a market before I actually trade it, and that's learning about what affects it, what news items affect it, what happens, what's the equivalent of the non-farm payrolls, what are earnings in this space. And after 6 weeks, I got involved as a trader because I'm like, there's no rhyme or there's no madness. It's just madness. But the technicals, the way that I trade, were working very, very well. And so yeah, basically got into it. And the back half, I started trading in August of 2017. The back half of 2017, I did better returns than I had done for the last 3 years in all of those other markets combined. So it was, pretty mind blowing. And here I am now.
Yeah, no, it's great. And let me switch the gallery view. So when you were trading, so what expertise did you have? Was it equities? Was it commodities? Was it FX? Did you trade all of them? Like, for example, I've traded equities, I've traded options, I've traded futures. FX is something I personally never got into. So what markets do you have experience in trading?
Yeah, look, I traded FX, I traded bonds, I traded stocks and equities, whatnot. I traded commodities, and commodities from, not just your vanilla, like your gold and silvers, but, I trade orange juice, pork belly.
Wow. So you've traded it all pretty much.
Yeah, everything. And usually all through futures.
Which kind of trading did you like the most and time frame? Were you did like swing trading futures? Did you enjoy the most? Was it more short term day trading on a certain market? What was like your favorite thing to trade? I know you want to trade everything because again, you don't want to get bored. And the other thing with trading is what you said, like, hey, I just got tired of it. You know what? Another reason for that is you can always come back to it. Like if you traded 20 years ago, if you traded once the internet brokers came out, nothing has changed. It's only better tools now.
Yeah. It's like Jesse Livermore in Reminiscence of a Stock Operator. The same quotes that you pull out of that wicked book written like 100 years ago, they're still as true today as what they were all the way back then. So look, for me, when I was in London, I really enjoyed trading the TF, the YM, the EQ, and the ES, like all the basically the futures, the mini futures contracts for the major indices. I love trading the open. I love trading.
Oh God, that destroyed me. I like it destroyed my day trading strategy because I had a day trading strategy also in the equity markets on the indices of trading the 10 or 11 a.m. market reversal. But then I'm so bored at market open, I would try to trade market open, and now I'm using my actual profitable strategy to get out of a multi-$1,000 hole because I was because I rushed and got in at the open because I was bored. I mean, that's one of the reasons why I don't trade that strategy anymore, because I couldn't just keep my hands off the keyboard at 9:25 in the morning US time.
Well, that's it, isn't it? I mean, look, for me now, I don't trade those low. I mean, I was trading the 1, the 3, the 5, and the 15. So real, like on tick charts, just bang, 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 bang.
Oh, wow.
Real low stuff. Just sort of scalping, real quick stuff. I mean, we had an office in London. There was 4 of us in there. And, we all had full screen set up back to back sort of trading. And we had the squawk box so we could actually hear into the pit. And it was quite amazing, like listening to you wouldn't make a decision based on the sound, but after doing it for a few years, you could hear this. It's like a big wave coming. You can hear this rumble, like, and the volume just notches up as things are about to happen. But I really enjoyed trading like that. But nowadays, I mean, I've got 2 kids now, and you know, and I run businesses. So from my point of view now, I much prefer to be trading on the higher time frames. I love my swing trading, the 4 hour, the 8 hour, the 12, the 16, and the daily. I mean, I will still trade the lower time frames, but I much prefer to have the time to go, right, I know when all the 4 hour candles close, I've got 4 hours to do what I got to do, and I can come back 15 minutes before that candle closes. And I trade those windows.
All right. Well, last 2 questions, and then we'll go to the charts. So do you still trade anything other than crypto now?
I haven't for a while, but I've refunded some account. I'm about to refund. I've been moving some money around at the moment, simply because the equity markets are starting to get a lot more attractive for a trader. The reason I love crypto is because it goes up as fast as it goes down. Whereas with equities and with, you know, traditional markets, they tend to go up slowly, go down very fast. I did very well in the global financial crisis. You know, a lot of people, when I was in London, you didn't tell them you were a trader around them because apparently it was our fault, which of course it wasn't. But, you know, when a market gives me those sorts of signals that we could see a very strong move, I will trade those markets, and those markets are starting to really pick up some momentum now. So I am looking to get back into those markets.
So I actually did terrible in the '08 financial crisis because the account that I blew up, my trading account, I was shorting real estate and home builders, but I started shorting them in mid 2006.
Oh, you couldn't hang on long enough.
So by early 2007, I ran out of money shorting the real estate sector, and I had to go get an actual financial job. That job was at Bear Stearns, which a year and a half later went down due to the real estate and financial crisis. And then, but I was making good money, and I finally built another portfolio. But I was deciding what to do with that portfolio because I saved up, you know, like 50, 60 grand in a year because I was living very, very cheaply and I had a nice paying job. And in 2010, I went down to Miami looking at condos for like $40,000 that were like, because the real estate market crashed so much. And I didn't pull the trigger, and now those condos are like 400,000 or 500,000 that I could have bought for 40, and I was right there standing looking at them. So the real estate market has been a giant plague.
Yeah. Well, I was short Northern Rock. Northern Rock was that was the first one that went. They got bailed out, but I just happened to be, because on the FTSE at the time, it sort of looked a bit like Bitcoin has done for now, but like on a weekly chart. It was sort of, it didn't have that lower high and a lower low. It was starting to downtrend. It didn't have that really strong momentum to the downside yet, but it had been for about 18 months to 12 to 18 months, just sort of consolidating sideways. And I happened to be short Northern Rock at the time when they came out and basically said, we're screwed. So that was a big trade for me because of the size of the move that it made. And then it was just shorting the indices, you know, just taking advantage of the downtrend and just being patient enough to wait for the opportunity on the pullbacks and hitting short. So it was, you know, it was just knowing how to trend follow and getting some stellar moves.
Yeah, no, my entire career for the last 10 years or more now would have been 15 years, would have been so different if only I started shorting real estate 6 months later. Like that's what 6 months makes, right? Of course, everything would also be different if I bought Bitcoin 6 months earlier, right? Like, it would have been way different. Like Bitcoin was like went up 100x in 6 months. Anyway, all right, wait. 2 more quick questions. Do you trade altcoins, or is it only Bitcoin versus the dollar, or do you try to profit from trading altcoins?
No, I profit trading altcoins for sure. Look, I like trading with margin. So naturally, and you know, trading at size, naturally, I'm going to look at the Bitcoin and Ethereum contracts on decent size margin because I've got the liquidity to get me in and out. But no, look, I'll trade against, you know, anything. I really don't mind. It's got to have optimal chart structure, so it's got to be clean. Clean, smooth flowing trending charts is what I look for. Anything that's sort of gappy, I leave alone. I just avoid it like the plague because there's just too much risk of slippage, and slippage is risk, and risk is bad, and to be avoided at all costs. But I mean, when we jump in the charts, I'll show you the list that I've got.
Sorry, other important questions. Your hodling portfolio, US dollars versus Australian dollars versus Bitcoin versus altcoins by percentage.
About 70% Bitcoin. And the rest is pretty much 30% across more or less some top 10 projects. And realistically, the reason that I'm not a fundamentals guy at all, Tone, and I don't claim to be, and I don't pretend to be. And first things first, I try and make logical decisions. Sorry?
You're all TA.
Yeah, I'm all TA, but I'm also like I've researched the market from a TA point of view, and I do understand that like something like XRP, I see that and I go, okay. I mean, I'm a speculator. I'm not someone who's looking at the tech. I'm here as a speculator. That's what I do. It is my job. That is my life, right? So I know that these things do move for God knows why half the time, but they take off. And my job, as I see it at the moment, is to make more Bitcoin. So that's why I've got 30% that's spread across some of those other top 10s, because if they do take off, and it's only 30%, then that 30% could equate to another 50%, of Bitcoin across that whole portfolio, just because of the madness that this market gets going when it gets going,
Right, but you clearly don't promote like any of these altcoins as the future of of innovation.
Nope. No, I keep quiet on that because I just don't know, and that's the thing. Like, I'm very vocal about trading. Like, I get people all the time. You get this too, mate. You go, if a trend changes, if I got a higher low and a higher high, I'll say, hey, it's in an uptrend, so therefore I'm bullish. I'm looking for long trades. Then if it changes, they go, hang on, you changed your mind. It's like that's what a trader does.
Right. I deal with that problem. Hey, also, you're out in Australia, so you guys are dealing with the most craziest time zones ever. How is trading action during your awake time zones, or are you on a crazy sleep schedule?
No, I'm not on a crazy sleep schedule, mate. I just trade when I'm there. Yeah, look, I don't find it too bad. I mean, look, there is the dreaded 2 a.m. candle, which is in 3 hours time from now. So what's that going to be, midday for you?
Yeah, it's getting late there.
Yeah. So that candle quite often sets up and triggers a trade. And that's the one like that does work quite frequently. The unfortunate thing is, of course, that I'm not around for that. But I mean, when I traded in London and FX and commodities and whatnot, the only thing that changed is I didn't trade the open of the US session anymore, because that's 11 o'clock for me. And look, I just didn't really. I don't perform well late at night when I'm trading. I prefer to get up and do my exercise and get my head in the zone. But I thought I wanted to myself, because London time zone to Australia, it's literally like doing a handstand. It's a total opposite, polar opposite. So I wondered, will my results be the same? Yep, I carried the same results through. Nothing at all changed at all. So yeah, quite interesting that. I think the trader makes the money, not the market.
All right, so now let's get into the charts. We're going to start with the long-term view. Here's the monthly chart that I have. Another new question that I asked. So when I learned how to trade, the word Heikin-Ashi candles never crossed my radar. This is a recent thing. I'm kind of new to the Heikin-Ashi candles. I have put them on a monthly chart only because it just looks so much cleaner and it works so much better with the TD sequential, which is one of my main indicators that I use for timing the market. Now you can see how I anticipated Bitcoin for the bear market in Bitcoin to last significantly longer than it did. But right now my monthly candles are pointing to more upside, and that we have rebounded, even though at the time I thought we would go lower. I actually thought we could reach the prior swing high, which is something I like to do. I probably underestimated the fact that Bitcoin has a halving, because according to the halving, we did hit the prior all-time high as far as miner revenue is concerned, but not necessarily price. So what is your two questions on this? What are your thoughts on Heikin-Ashi charts? Do you use them? What do you think about them? And what is your monthly candle out view for Bitcoin? Are you bullish? Are you concerned? The monthly looks bullish, but the weekly and the daily, not so much to me, and we'll get to those in a minute. You can interrupt me at any time, and then I'm going to go through my charts real quick, and then I'll let you do screen share for your charts.
Yeah, look, first, I'll answer that question. I don't use it. I haven't used it. I've never even looked into it. So I'm not the person to give you any feedback on Heikin-Ashi.
Right. Right. And like the older the trader is, like the longer you've traded, the less the less you care about the Heikin-Ashi, because it's just not how we learn.
Yeah. Yeah.
Okay.
That's right.
So what is your view on the long-term monthly candle outlook?
Well, look, I mean, looking at your chart right here, I mean, look, what we've got to be cognizant of is that we are moving higher. You pointed out before, if you chuck up the weekly, just quickly.
Yeah, we can go straight to the weekly. I was just curious on your long-term view, but here's the weekly with normal candles. And to me, we broke this trend line. We're below this 7-period moving average, which I like on a weekly. My sequential has been in total neutrality, telling me not to trade since July 15th. For like going on 6 weeks now. The weekly chart based on sequential for me has told me not to make any trades and stay in cash. To me, this has a little bit of a bearish posture, but a short trade has not yet been activated.
Yeah, I'm with you on that. Different ways of coming to the same conclusion, I think. I've still been trading through this run. I just haven't been that active. There hasn't been a lot going on. Like, for example, I mean, the run up, I got long with leverage at 8,089 and got out somewhere. I can't remember. I got a couple of $1,000 profit in the run. And then in that last little run up that we had as well, I got a trade there. What I was finding is that when we go up, I'd get a trade or two. When we go down, I get a trade or two. But in the last sort of 6 weeks, there's been one trade on Bitcoin. That's been it. Just one singular trade. And the market's sort of getting to a point where it's getting a bit, it's questioning itself as far as I can see, and from how I read a chart, and it's a bit uncertain. And you know as well as I do, Tone, that markets don't like uncertainty, and when they get uncertain, they also become erratic. And when you're talking about a market that is as small as Bitcoin, and let's be honest, it is just a spot in the ocean. It's such a small market right now. And the players that are in that market, it can really get jittery. So you can get into a trade and stopped out very, very quickly. So it's been the last sort of few weeks. I think.
Hey, so in the last few weeks, where was that bullish trade in Bitcoin for you? Was it the run up at the very early August when we bounced off of 9,500, or was it the drop then after in early August?
I got a run up and I got a run down and I got another run up.
Okay, in the last 6 weeks.
Yep.
Okay, got it. All right, so quickly looking at my charts, because I do want to give my audience my outlook as well, and I'll do this quickly. To me, this is very, very scary, looking at these two descending triangles, one inside the other. And trading out of a descending or ascending triangle is probably one of the best statistical trade you can make, at least in my experience. And both of them are pointing to some very, very scary outlooks. The smaller triangle is pointing to a $2,000 drop down to 8, with the bigger triangle pointing to a way more serious drop all the way down to 5,000 or so. What is your thought on these triangles that I drew?
Oh, look, mate, from my point of view, I mean, I don't use sloping trend lines in any of my trading. So I don't come up with triangles, but I can see the support levels you're looking at. For me, the key levels that bullish rejection candle, what is it? I think sort of end of July, you sort of got the horizontal line drawn through. If we break down through there, it's that's a concern for me. And the reason for me to have a concern for them, I mean, I trade very, very simple. I just keep it super simple. I did use a lot more stuff, but I think, you know, as you progress, well, certainly as I've progressed in the way that I've been mentored and trained, I've been taking more away from my charts of late. When I say of late, I mean the last sort of 4 or 5 years. And so I just focus on trend itself. And for me, that little candle, if we break down to a new lower low, well, we'll have a lower high and a lower low. For me, that changes my view. For the time being, we're consolidating. Bitcoin has a history of doing this. It did it back before the 2016 kickoff. Excuse me, of that run. It consolidated for quite some time. I wouldn't be surprised to see it do it again. We seem to be having a real challenge with 10,000 to get below. We haven't closed below 10,000, I think 8-9 days. So it is very interesting to see how we keep reacting to 10,000. Because whenever we're above 10,000, I still see a little bit of juice in the tank and a little bit of optimism.
Yeah, I pretty much become optimistic if Bitcoin can go above the last swing high, which is sitting at around 12,000. Now, it doesn't literally have to go above it, I become bullish as it approaches it because I want to be there when it breaks out. Now, if I'm wrong and I start to go bullish, I will immediately take the stop loss. This happened to me right here. Like, I don't like double tops. When a market approaches the double top, I want to be long so I don't oversleep the breakout. And so I actually went bullish right here near the top, but I immediately, took my bullishness off the table the moment we could not break the yearly high.
Yep. Yep.
Okay,
I don't think we saw enough pullback either. Like on that weekly, I've got some things I can show you.
Yeah, you know what? Let's go over to your charts. I mean, that's pretty much it for me. There's no reason for me to go to lower time frames other than really quickly show the 4-hour, and then we'll go over to your charts.
Sure.
So the 4-hour, I'm just looking at this downward channel in a 4-hour. I know you don't like sloping trend lines, and we're going to talk about what you like in your trading. But I'm looking at this downward channel, and until Bitcoin breaks out of this channel, which gives me a little bit of rope, like I don't necessarily need to wait for 12,000 based on the 4-hour chart. Getting to 11,300 is enough for me to break out of this channel. I now anticipate the break of this swing high, and then this swing high, and then this swing high, and I just become generally bullish. One last thing, I usually do these in the middle of a podcast, and then we're going over to Cobb's charts. Check out tonebase.com. I just finished the options workshop. It will eventually go on demand, but that took place this weekend. If you want to support this channel, check out the affiliates page. If you're going to use TradingView or brokers, you can support with that. And also check out the upcoming event. This is the financial summit going on in Bali, where I look to connect young, hungry traders with potential trading capital. So this is an event. There is going to be some educational component if you want to come for a week of a boot camp on learning about advanced trading. This is really an event for those that already know how to trade, and they can. Hopefully, I can bring some good algorithmic funds there that can program your strategy and provide you capital. And for them, it's great for them to meet some young traders that are looking for capital that they can monetize with their strategies. Very high-end resort in Bali. You can see some of the people already in attendance, and I will be posting very soon more people that are going to be there for you to meet, the funds and some of the other traders. All right, that's it for my shilling of the financial summit in Bali, October 19th to 25th. A little later, when I get back to screen share, I'll talk about my upcoming calendar and travel plans before we finish the charts. All right, I'm stopping screen share and off to you.
No worries. By the way, I think that's really cool that you're giving people the opportunity to come along and basically set up a career. There's not enough events like that unless you're inside of the inner sanctum.
Exactly. And I don't think they exist. There's so many events that try to connect high net worth capital to people that will trade that capital. But I really wanted to put something together because I don't have a connect to high net worth capital. I don't manage money, but I do have a connect to young traders. And I wanted to have an event to connect talent of trading with hedge funds.
Makes perfect sense, and I hope it goes well, and I'm sure it will. But I think it's a cool thing and opportunity that's there. So yeah, for anyone who's looking at it, it's not easy. You know what? If you've got the results, it's really easy to get money. So if you've got the results, go and get some money. Makes your whole life a hell of a lot easier if you want to do it as a career. All right, let me show you how I've got my chart set up. So I know you've got black, different color for a start. I got 4-hour usually on the top chart, and the daily on the bottom. So I'll jump up and show you I'll do the XBT because that's where I typically do my trading. I'll start at we do monthly. Okay, so just checking this out for me. The monthly just showing me, all it's showing me is that we've moved higher. I don't see any, I want to see a higher low, and we could pull back very easily. I mean, going on what you said before about back into 5,000, I think that would be a deep pullback. But I trade in around these moving averages, and look, I'll bring the weekly up so you can see them a bit easier. That's just the 10 period and 20 period EMA, and also the MACD. That's it. That's all I use. Oh, look, I will use Fibonacci, I use support and resistance, but I don't have anything else there. My whole focus is on price action. So my theory is, and not just my theory, but the way that I trade is that price is the only constant. It's the only absolute. It's price measured by time. That's all it is. Each one of these candles is where the price has been and the time frame, which is the weekly. So I've just focused my whole career on learning about price and how it actually looks and trends. Now, for me, as you can see here, we pulled back into this cradle zone. This is what I call the cradle zone, in between the 10 and 20, or in around that area. And it works in any trend, by the way. Look at the uptrends, all these pullbacks, yeah? In the downtrend, we pulled back in. It didn't work quite so nicely through here. It doesn't mean there's always going to be a trade there. I'm just looking for a point of equilibrium, a point at which
it looks very good. I'm really liking that 10 EMA. It's really supporting the body of the candle most of the time.
Mate, I'm telling you right now, Tony, you put your 10 and 20 on literally any chart, on any market, on any time frame. And if that chart is trending, tell me that you're not going to be able to find opportunity using it. It's a fact. It is just true. And people can argue with me, but I'm not going to argue because it's a waste of time. I mean, they won't, because when you get a good trend, it's about trying to find your entry point. I mean, TA, it's not a magic wand. It helps us to make decisions about momentum. And that's really all it is. It helps us to make decisions. Now, if you want to be a trader, you better be bloody good at making decisions, because that's what we've got to do. The reason I got this line drawn in here is to look at these lows through here. It was equal to the highs of 2019 before that weird little pullback. Now, I got some flack by saying I think we'll get back to sort of 6,000 when we're pulling back here, because we had
not as much as me for that one. Trust me.
You know what I love, Tone? When the market goes up like this, it's adoption. When it goes down, it's manipulation. Every single.
But here's the best part. Here's the best part. In the stock market, it's the opposite.
Yeah, I know, right? It makes me. I get asked all the time, what do you think about the market manipulation? I'm like, what do you want me to think about market manipulation? Does it happen? Probably. Does it happen everywhere? Absolutely. What can I do about it? Nothing. So why should I think about it? I shouldn't. We can only talk and think about the things that we have control over. And I haven't got control over when someone wants to manipulate a market, whether we're talking about the DAX, or whether we're talking about the LIBOR rate, or interbank lending, or that sort of stuff. It's the same thing as LIBOR rate. Markets do get manipulated. Shit happens, okay? It's just what happens, yeah? But looking at Bitcoin now, we've got this pullback into here. I was hoping to see a bit deeper. I was hoping to see deeper here, and I was hoping to see deeper here. And I'll show you why. Let me just jump out here and bring this up. So again, and this is Bitcoin on BitMEX, so it hasn't got all the whole run, but this is the 2017 run. As you can see here, I did a little experiment on how far each of these pullbacks occurred. And you can see, 32, 40, 39. And that one's moved over here for some reason, but anyway, there we go. And I found it very interesting, Tone, because what I ended up with was an average on these four pullbacks, 1, 2, 3, and a fourth here. This one was quite a short-lived one, obviously, in the middle of the mayhem. But in these four pullbacks, the average pullback was 35.25%, I think it was. And look at the upside. And that's from the low in that move to the high before it pulled back again. Now, the average pullback, 35.5 or 25, whatever it was, the average upside after those pullbacks, when it pulls back into that cradle zone, like you can see, perfect, right? Each of these pullbacks had an extension move average of 207%, okay, 207%. So when I'm over here and I'm going like, okay, cool, we're in a downtrend, we got lower highs, lower lows, and then we broke, of course. Then I was sort of over here looking at this, saying to people, look, if we can break up through this high, that's when I'm going to start to be more bullish. I didn't say I was 100%, because people don't understand, as a trader, you can be bullish for a day. You can be bullish for an hour. It's based on trend. It's not based on people who go bull market. They think a bull market is this. So if you say you're bullish, they think that it means that the market's going to go up forever. Fine. That's what they think. It's not the way I think. So as we broke up through here, I got more bullish. And we just really haven't seen that pullback. And now when I was saying I want to see a decent pullback, people were throwing all sorts of shit at me because they didn't want to see a pullback at all. But
I'm with you. It's so unhealthy not to have a pullback.
Look at our move now, right? We got
wasn't enough for me.
It was close. And I thought, okay, well, if that's to be the case, we had a bullish candle here. I thought, okay, if the next candle breaks the high, maybe we will just see a slingshot straight up. Maybe 34% will be enough. I mean, past performance is no representation of future performance. Perhaps, we'll just sling off again. We'll see another big run like this. We didn't see a pullback here. We didn't see much of a pullback here. Perhaps we're going to be the same here. Then we saw this bearish candle. It didn't break the low of the prior candle. Then this bullish candle broke the high. At that point, I thought, oh, okay, here we go. This could be interesting. We could get going. And since then, we've done very, very little indeed. So what we've actually got potentially now is a higher low or a lower high. Now, those two things are interesting to me because what we're doing right now is we have not got any clear direction, okay? We've got to break, in my eyes, this high or this low. If we break here, we'll have a higher low and then a higher high. If we break here, we'll have a lower high and then a lower low. So we're in limbo right now, and that can be very easily shown on the daily. Look at this. All over the show. It's been an absolute mess. And one of the things that I talk to when I'm teaching people, and and not just people that are looking to be traders, but your hodlers, they didn't get out in 2017. That 98% of them didn't get their profits off the table, and they were cheering, hurrah, hurrah, Lambo, Lambo, and then they were cheering, or they were crying themselves to sleep, a good 5-6 months later. Very simple for me. When we get big candles at the end of when you don't know it's an end of a run until obviously after the fact, of course, hindsight's 2020, right? But when candles start to get really big like this, that tends to be when you're getting your last little push of the buy. And very often we will see the pullback after those big candles. Now, if you have a look at this chart here on Bitcoin right here, right? Big candles, then a big move again, and then we came off. Let's just rewind a little bit here and go back to 2017. Something very similar. And look, I'm not suggesting that we're going to go into a downtrend or anything like that. I'm just showing the logic behind these moves. Big candles, pulled back, a little squirt. Then we got another move back up. So you had plenty of opportunity to exit through here as well. It didn't have to be trying to get the top, because I try and capture, I'm not after the bottom. I'm not after the top. I'm after the chunk in the middle. And messy came back, and then we saw the next sell-off come in. So it can be very handy to learn what traders are looking for.
Go back to that. I was actually still hopeful and bullish at that secondary peak.
Yeah.
But I became bearish. I'll tell you exactly what day. It was January 10th or 11th when those two candles, the two red candles. Oh no, you were there. Yeah. You were right on there. The two red candles following the secondary top. That's when I became a big bear, calling for some ridiculous low-end targets, with the most optimistic being 5K, the middle of the zone being 3K, and the most pessimistic being 13K, the prior swing high. And I became that around January 9th or 10th. It was around that area. Yep, right there. So January, a little later than that. So around January 10th or 11th. So right around there, around 15,000 a coin. So it was around that 14 to 15,000 a coin. I became a huge bear, and I stayed a bear maybe a little too long.
Yeah, I mean, look, you live and you learn, right? I mean, that's what markets do. They're there to be traded. You just got to manage your risk, and hopefully you make more than what you lose. But if you have a look at this moving averages here again, just want to bring the focus to that, because if the viewers take nothing else away from this, then I suggest they take this. Have a look at this, look back here, moving averages back in. Now this one was a bit far. That was a trade for me. That was a trade for me. Look at it. When it does start to move, we do see this.
I'm sorry. I don't know. I'm interrupting you a lot. How do you treat the moving average cross? Is that something that interests you? Because the way I teach moving average crosses, only if the candle is going through the cross is it actionable. If your candle has a big distance, whether below or above the cross, it's not a tradable opportunity, the moving average cross.
I don't look at crosses at all. And the reason I don't look at crosses anymore is simply because it cost me a lot of money back in the day. I was trading a 3 and 8 cross. I spent 5 days on it, pretty much not sleeping, just either long or short the whole time. I dusted so much money in the first 3 days. I said, "I'll bugger it," because moving average crosses look fantastic with hindsight.
Yeah, no, because if you back up, right, you see two moving average crosses on your chart right here back in September, right?
Yep.
So to me, both of those would actually be actionable because the candle
above
is going through the cross. Maybe that green candle is happening a day too early, but it's close enough for me. Same thing with that bearish candle. It actually touches a little earlier to the left.
Oh, here?
No, no, left one, the down, the bearish crossover of the moving average.
Oh, sorry, over here.
That one, yeah. So that one also is actionable for a short. But if the moving average cross and the candle is already way outside and there's distance between the candle and the cross, then that's not a tradable opportunity for me.
So for me, it's about the moving averages being in the correct order, not the cross, and then getting the trading setup at the time. For me, that's the setup. That little bullish candle right there in that cradle zone, that is just absolute perfection. That's exactly what I want, and that's exactly what I got, and it was a very, very good trade. Now, of course, it's very easy for me to say this in hindsight. You know, it's very easy to say, oh, I got long here and I got out here, and I'm not a hindsight trader, but fact of the matter is that, you know, that's an example in my courses because it's a trade that I did take. And I look at, I've got 3 strategies, mate. Like I only trade 3 strategies. There's a breakout trade, there's a Fibonacci trade, and there's a pullback trade, which is what this cradle trade is all about. And the simple reason is there is method to why I've got just 3, because I've got other strategies, but very rarely do I use them. My bread and butter is these 3. And because markets move in 3 ways, they consolidate, they move and pull back, like we see in nice trends, right? Or they just roger off, they just take off. And the pullback is the cradle that gives you opportunities when it's sort of good cyclicity. The breakout is for when obviously there's a consolidation, you're waiting for the next move. And the Fibonacci is when markets are moving really fast and you can screw down to those lower time frames. So it's, there's method to the madness. I mean, I'll show you again the trade that I got that was a killer. This has basically made my whole month. All right. The first trade of the month has made my whole month. And it was this one back here. Again, back into that cradle zone. And, you know, my subscribers that are on my newsletter or whatnot, or videos, I put this out to them as well and got stopped out up here. So a really good couple of $1,000 and something, $1,400 move. And if you consider when you're using margin here, by the way, you know, people talk about getting a 10X or a 12X or whatever. That typically means in crypto that it's, you know, moved 10 times what the price you bought it at. The beautiful thing about trading, especially with margin, is let's say I risk $1,000 on that trade between my entry and my stop loss, right? And I don't scale out, which is to, you know, knock off some profit. So I've got, you know, risk-free or I've locked in profit. Then from where I got in at 9, I was in before 10,000, right? Which I don't often do around the round number. It was about $160 stop, I believe. And if you talk about $160 stops, call it 10,000 stopped out at 1,500, sorry, 11,500. You talk about $1,500 move and $100 stop. That's 15 to 1, right? That is what the beauty of using margin and trading is. You've got a stop loss in to manage your risk. So, you know, whether your risk is $1,000 across a $200 stop or a $100 stop, it's $1,000 is $1,000, right? But that's a trade where just one trade, and look, I did scale out. So I ended up taking about 9.25% net on that trade. And I've had 2 trades since. It's been such a quiet month, but just showing like another pullback in here, another pullback in here. It's just knowing what to be involved in. And then on the way back down as well, where we see that actually that was over here. I didn't actually take this one because I was at an event in Sydney. It's always the way, guys, follow me on YouTube and on Twitter. And when I'm at an event, make sure you're trading because it always happens where there's great setups. I've been waiting for weeks and then I do an event and it's like they set up and they work. So here's one again, you know, in a downtrend, pulled back in, rejected 10,000 the number was. And down she went. You know, it wasn't as big a move.
Yeah, well, I really like that. So zoom back in. I really like that. That reversal candle right there. Reversal candle right in between your moving averages is just beautiful. So where would your entry be? Would it be at the rejection of the purple moving average, or would it be on the big red candle as it breaks below the doji?
It wasn't actually that one. Where was it?
Well, if you were watching that candle, right? Like as it breaks the low.
As it breaks the low.
Yeah, that's actually exactly what I teach as well. When you're trading, the reversal candle is more important in my hierarchy than moving average rejection. So if you have to choose between the two, wait for the the break of the reversal candle's low. Though it's okay to maybe go in a third of your trade at the moving average rejection, and then add to that trade at the break of the doji's low.
Yeah, I mean, it's not surprising that you sort of have similar views as well, because at the end of the day, if you've been around the markets long enough, you just know what is, and you've got your own way of finding your entries. But I mean, look at what I've found, because I'm very disciplined when I'm very disciplined. You know what I'm like when we're out. I'm pretty fun and go for it. But when I'm trading, I can't have that personality, man. You know that as well as anybody else, man. Like you just can't have it. So,
well, you did in your early days, and that's how we learn.
Well, that's right. Yeah, exactly. I've had to become somebody better when I walk in here and shut that door. I'm a different human being, trust me. But I've sort of worked on a checklist-based strategy. So for each of the 3 strategies that I work with, it's a literal checklist. I've got essential factors, so I have to tick those off. There's between 8 and 9 per strategy that I have to have, and then there's bonus factors to increase that probability or to help you to decide between one or the other. Now, the way the good thing that I've had for myself on that is that it's very easy to look at one thing at a time. If you try and think too much, I find that for me, thinking is a bad thing. I've got right here on the wall here, it says, trade what you see, not what you think. Because when I start thinking about things, it's not my job to think. It's my job to stick to my trading strategies, and it holds me accountable. It makes it far easier for me to execute, and it leaves a lot of that emotion behind. If I don't have to think, I just have to act upon a literal checklist, it's helped me, and it's helped a lot of the people that I've been working with as well. It just makes it so much more straightforward. And then if you take your screenshots of your trades and come back and review those trades when you're out of them, it's very easy to hold that checklist up and go, oh, I was kidding myself on that one, wasn't I? But the rest are there. So you can actually hold yourself accountable, because accountability is what it all comes down to. You hear people say, oh, it's the manipulation's fault. It's Trump's fault. It's this person's fault. It's the exchange's fault. Someone's out to get me. Well, guess what? All the successful people I know take responsibility for their actions, and it's about accountability. You cannot blame other people for your decisions on a trade. You cannot blame other people for anything, because it's your choice to get involved or not. And I find that that checklist, it helps people to really stay true. It's been a winner. People seem to like the checklist based trading strategy. That's for sure.
Yeah, no, it's like an airline, like before a plane takes off, they go through this checklist to make sure.
Yep.
And they're trying to get that for doctors and surgery. Go through this checklist, just make sure that everything is covered. And what I used to do is, instead of having a checklist, I mean, I kind of had my rules in my head, but anytime I made a giant blunder and it cost me a lot of money, I would actually print out in big print what I did to screw up, and I would like tape it to the wall in front of my workstation so that I can
see dog's nose and it's shit.
and how much money this mistake cost me. And it's always there in front of me to make sure I don't do it again. So that's what I used to do, but it's the same kind of thing. Oh, by the way, one of the first things I say in my workshops in person, I just go like this. No one gives a shit about your $1,000 in the market or your 10 options. It's not a conspiracy against you.
Exactly. I say the same thing, man. I say the market doesn't give 2 shits about you, about your mortgage, about your kids' education, about your bills. It doesn't care. If you don't care about the market, you're not going to get anywhere. It's like a dance partner. If you've ever watched somebody, try. I remember the last time I did this was probably my debutante ball, which is I think your prom in the States. But if you watch somebody, if they try and drag the person around, it looks terrible. But if you learn to move and work with your partner, it starts to look beautiful. Now you've got a choice in the trading markets. You've got the opportunity to try and manipulate things to what you want to do. So, I'll just move this a little bit, I'll just move that a little bit, and I'll make the trade so I can get the trade. If you want to trade, go and get one, no problem. But if you want profits and sustainable outcomes over a long period of time and consistency, and you're not bringing a consistent result, listening to yourself and the market, you're not going to get it. It's having a consistent approach, you've got a much better chance of having consistent results there as well. So yeah, that checklist is definitely helped. But I've been throughout this whole period here, mate, I've been quiet. I got into a trade yesterday, fastest stop out I've ever had in any market. Remember how Bitcoin, where is it?
Did you go long or short yesterday?
I was long on an alt. I can't remember which one it was. That's how little I care.
Nice.
And I was short Bitcoin because I was long on this alt. But here's the reason why I've been looking more at the alt markets right now is because have a look here. This is the 4-hour chart, right? Check this out. It's doing nothing. Now, when Bitcoin consolidates, like it did back in, what was it, August, October last year, before we saw the breakdown in November, I was doing really well trading the alt market. So whilst I'm at it, I'll show you my watch list. So I've got, you'll notice I've got the charts over here as well. So I've always got one chart, one screen of my 4 with the top 10, which is this. And I just throw in the XBT and the ETH contract on BitMEX because they're the ones that I prefer to trade there. So I've always got a snapshot of the market right there, bang. Then I've got my watch list, which is, these little red window type things. And look at how dead my watch list is this, like today. I'm trying to find good trends, right? Now, the problem that I've got at the moment, there's nothing there on that. I'm trying to find sustained trends. And look, yes, I've got a higher low. Yes, it's pulled back in, but I mean, how much confidence do I have in this right now? None. None at all. I had more confidence yesterday when there was a nice trade that set up, but once bitten, twice shy. It's not a good market for trading at the moment. It's a good market for waiting. But so I'll do each day. I'll start with my top 10. Then I'll go to my margin list. So this is all the pairs that have margin, whether it be against the USD or against BTC. So you can see all of what those are. There's a couple of ETH pairs in there, but there's not enough volume going on there for there to be anything really worthy at the moment. So I'll scan through those to create my watch list. And then I'll go across to either the Binance stablecoin pairs. So that's USDT, True USD, and PAX or whatever it's called. I'll have a look there, or I'll have a look at these Bitcoin charts. And this is where, like, the problem that we've got at the moment is, I mean, look at all these. It shits me to tears, Tony, because look at this. This is what every alt chart looks like at the moment, right? Through that run. Oh my God. Can somebody please offer me some pretty heavy margin on these alts? Because like, just shooting fish in a barrel, mate. Look at how good these trends are. But I can't short these bloody things. So I'm just scooting through these things each day, looking at it. So I'm looking at pretty much the top 150 and mostly Binance. I know this says Poloniex, but if it's not on Binance, I'll list the next highest volume area. But if you look at this for me, I talked about optimal chart structure before, right? This is too thin. And what I mean by thin is people say, why don't you use volume? You're crazy. You don't use volume. No, I do use volume. I absolutely use volume. I just don't use a volume indicator. I know what poor volume looks like. Do you know what I mean? If I show you on the 15, look, that's what poor volume looks like. What are you meant to do with that? Look at all these times where there's no trading going on. Even if I go to something like this, look at that. See how fun.
It's like I tell people, I can guess what the volume indicator is going to look like with 90% accuracy by looking at the price action.
Exactly. I'm with you. And you compare it. This is a 15-minute chart on, I don't know, whatever this is, IXL, I don't know what they do, but look at Bitcoin. I know it's not pretty right now, but that's not the point. There's no gaps. It's fluid. Even Ethereum, it's fluid. A little bit gappy. This is on Bitfinex though. A little bit gappy there. Actually, that's got shitty chart structure.
Yeah, that's not good at all.
That's pretty bad. Huh. Yeah, it's been real crap lately.
Well, you're also looking at Ethereum versus Bitcoin. If you look at Ethereum versus the dollar, you're not going to see
smooth as. It'll be smooth there.
Yeah.
But Ethereum, Bitcoin, yeah, it's. I mean, if I like, it's about knowing what you're looking at. That can't trade it. That can trade it. It's fluid. It's a bit spiky, but this is on a low time frame. So I do use volume, but I do it in a visual sense. I'm old school, man. Like, I got a lot of my students in my Slack community and that they have done some brilliant stuff. Like, for example, I use a risk calculator that they've created. It's in the members area now. We've got videos on how-to guides on all the different platforms that you're more than likely going to use as a trader, and they've got indicators. They got this, that, like they've coded all this stuff. And this might help you save time. It's like, yeah, but I trust myself over an indicator. I trust myself over anything. But if it works for you, I always check it first. I say, if it works for you, it sticks to the rules, then power to you. It's just, for me, I learned by scanning through 350 stocks every evening after work when I was in London, and working out which ones I was going to trade. And that was the way I did it. And I can scan through, like, I can do all my lists of all those charts, plus the margin list, plus the top 10, plus everything. I can cover that by myself. 10, 15 minutes. When I commentate it for my members, it'll be, I do that every morning. That'll be between sort of 20 minutes and half an hour, depending on how many opportunities been there. But I mean, look at the charts now, mate. Look, I was really keen over here. I was looking to get, this was the funky candle that I didn't get. Because I mean, look, if I just throw this line in here, I know it's not a perfect level of resistance, but I was hoping to get a breakout into here. Higher low, higher low, higher low, highs.
Yeah, I would have lowered that to the bottom of the candles only because of the double top. Like because of the double top, I would have lowered like that big green candle. I would have been okay going in on that because it was breaking a double top. So I'm lowering my entry. If I was going in at the first break, then I would use the prior swing high. So that's one of the things that I adjust. Like I hate double tops. I think they're meant to be broken.
That's what I noticed before. I typically, I mean, I don't mind drawing a level in if it's a little break, and I call that a bee's dick break. Why? How big's a bee's dick? Pretty small. And it sticks in your head. So I teach it like that because, you want to have, I'm a visual person. So even when I'm talking about something, I remember things in a visual sense. So that's a bee's dick break there. But 2 tests of resistance, I always go to the extremities of the candles. And when we broke through there, I was like, okay, cool. Higher low, pushing on. I thought maybe we're going to see another nice run like we did back here. And then this candle, look, it was a bit big, and I was actually not there. I remember not taking that trade, but in the morning suggesting, I might have missed an opportunity there. Sorry, not missed an opportunity, because you don't miss anything if you're literally not there. But it came back down. I think it might have tested a 50% fib as well. I think something like that.
Hey, keep it. Oh yeah, I was going to talk to you about this. Can you keep it frozen at this? Like don't zoom in. Like go back out a little bit. Zoom out. Oh, sorry, zoom out a little bit. Nope, the other way.
That way.
Yeah, perfect. Nope, too much. Go. Yeah, perfect. Okay, we're going to talk to FIBs in 1 second. But what I want to mention is what I really like about this chart, and this is what we were talking about, the moving average crossover. If you look at you see the giant red candle right in the cross. No, the other one. That one too, though. You see how that giant red candle goes right through the cross? And if you go all the way to the upside, the upswing, there's another giant red candle going right through the moving average crossover if you swing to your left with the mouse.
Over here.
Yeah. And then on the upside, there is again a green candle, not huge. No, to the right.
Oh, right.
Right, here. The green candle going right through the cross. It was a smaller green candle followed by the big breakout. So that's one of the things that I teach, that if your candle is breaking right through the middle of the crossover of your moving averages, that is an actionable trade. Now, on the flip side, if you go to the right a little bit more, there is another moving average crossover, but it's not happening that way, right? The breakout happened like 4 candles earlier. So that is not an actionable big green candle. But the downward one through the cross, that one is. So that's kind of how I don't, again, you don't care about the moving average crossovers, but I just really noticed that real quick because my eyes kind of go to those crossovers to see if a candle is shooting right through it. And those turned out to be decent trades usually.
Yeah, I mean, like I say, everyone's got their own methodology, and I think that's one of the cool things. People ask me all the time, like, if you're teaching all these people how to trade, one day will it do this? And it's a fair question. But no, I mean, it's hard enough to get 2 people to agree on where they're going to go or what movie they're going to watch. Like, can you imagine trying to teach the whole world how to trade? Forget it. For one, you can just exclude nearly all of the engineers because they always ask why. Sorry, engineers, just a joke. Pilots are fantastic traders, and so are women. Oh my God. Women are the best traders that I've ever taught.
I think former poker players are, because they already understand odds, statistics, and patience. Some of the best traders that I've met were former poker players.
Yeah, and vice versa. I'm with you on that. But I've been mentoring and working with people for longer than I've been in crypto and longer than TraderCobb.com's been around. I mean, I had a pretty decent sort of thing going on over in London. I was traveling all over the world and speaking and all that sort of stuff. But I mean, what I found was that women they ended up being percentage-wise better traders than men. Fewer of them would do it, but I just found, like, when I was mentoring them, they're very quick to ask for help. They're very quick to admit when they're wrong, and they don't they don't argue as much. Like they don't sort of go, oh, no, I'm going to justify this. They're like, oh, okay, you're the mentor, okay, fair enough. I'll learn from that. And they seem to be able to adapt and move a lot faster from one mistake to the next, because as a trader, as you know, mate, you got to make a lot of mistakes. You have to. And the faster you can make them, not just make them, but learn from them, the faster you can actually get on to, the next mistake, really. So I find that women are very, very good at when they get involved.
I will add to that in saying that I also find as with women traders, they are more more risk averse. So they have they have less chance of making more money because they don't take on these big risks, but that also allows them not to blow up an account. So they're more in the middle of the spectrum, and male traders are the more spread out. Hey, let's talk about Fibonacci's. Maybe not on a small time frame, maybe on a bigger time frame. Do you apply Fibonacci's on like daily, weekly, or we can do a 4-hour chart. I want to know, because Fibonacci's is another. You seem to stick to very few things. The 2 moving averages. I see you have the MACD. You don't look at other indicators. I was also going to ask you what you think about the MACD crossover on a weekly scale, considering how high it went up. But Fibonacci is your other tool, one of your early tools. So I want to talk about that. Oh, and quick question. What is the first thing on your checklist?
Trend.
Check trend. Okay. Because someone mentioned like the doctor checklist is now implemented in many hospitals. And the first thing on there is it the right patient? So I would say, is it the right stock you're about to execute?
That's a very good one. That's a very good one. And look, for me, I list them in an order of importance. So, for example, if I open up a chart and this is Bitcoin right now, I go, okay, there's no trend here. It's sideways. So for me, and you've got to be able to throw the trash out fast. So having that trend rule is number one. What it does is it eliminates 95% of the charts you look, or 90% of the charts you're looking at most of the time. So it does allow you to just go click, 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 and go straight through. And then after that, the next one is moving averages in the correct order for that trend. So it's got to have those moving averages in the correct order. And again, that will eliminate a bunch as well. So coming to your Fibonacci, I use Fibonacci for entry points on the lower time frame. I don't trade my Fibonacci booster strategy, which is a double cluster of Fibonacci's. I don't trade it on anything higher. I very rarely take it on the 4-hour, but what I use it to do, the 3 strategies that I use, they can sort of overlay. So once you understand the fundamentals of how I trade, you can overlay lots of different things. And Fibonacci is a really, really good one. For example, I love Fibonacci as an accurate tool for pullbacks. As you can see, the 50% you've got to understand, that's not a Fibonacci point. That's just the halfway. It's not a Fibonacci number.
Oh, I couldn't agree more. I couldn't care less about that one. To me, it's all about the 38 and the 62.
I'm with you. I'll use the 50. But it's only if it's overlaid with something else. And so with my Fibonacci booster strategy, you've got to have the 50 or the 61.8, but it's got to have 2 levels. I can show you. Let me just take you back to 2017, because this was the first sort of call that when I was starting to get involved in this space, in the crypto space. And as we were running up, heading towards that 5,000 mark, I had said 3,000, right? I said, look, it's going to pull back to 3,000. At this point, I said, I'm very, very sure that we'll see 3,000. And everyone at the time was, I was getting screamed at for being an idiot and having no idea about Bitcoin and to go back to my traditional markets and blah, 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 blah. All of that. And I said, no, that's fine. But I'll be buying.
Yeah, man, those are my best 2 calls. I called the $5,000 top almost to the hour of it happening. And then I called the $3,000 bottom also almost to the hour of it happening. I think that pullback probably gained, I think that was like the best I've ever done. And that got me a lot of respect after that.
So did it with me. And so did the top on the way up. So I think we'll see 9,000 on the way. And we did. And I had a lot of people say, oh, look, I respect you now. I'm sorry I was being an arsehole, which is great, because if you're going to be an arsehole, when you're wrong and you change your mind, at least tell me, because most people are just arseholes. But it was really obvious to me, look, talking about the double cluster that I was saying, I mean, you got a triple here. You got the old highs, bang, bang. You've got the 61.8, you got a round number. And it was only, it bottomed out at, what was I say, 2976. So it's about understanding what you're looking at. Fibonacci's, absolutely useless unless you draw it correctly. I've seen other educators out there in this space, and I won't mention any names, but they draw it like this, which is literally upside down. They don't even know how to draw fibs. I see all sorts of shit out there, mate, that all for everybody having a crack. But if you're not someone who knows what they're doing, please don't try and teach the subject. You know what I mean? That was the reason why tradercobb.com started, mate. I was watching all this. I had throughout this period, I had no intention of having an education business, not at all, none. Didn't even cross my mind. It was when I started to see the crap that was out there that I got frustrated. I'm like, Jesus Christ, if these people are going to spend their money, they may as well get something that's useful. I'm not sure it's a very good idea to start a business out of frustration or anger, but that's how this one started.
Hey, so I'm looking at the moving out, the MACD, the giant MACD cross at the very, very top.
Yep.
And that really reminds me of the current MACD cross, but on a weekly scale, right? So you're on a daily scale. If you jump over to the weekly, and we look at the current MACD cross,
yep,
it's starting to scare me.
All right. Yep. Yeah, I see that. I don't look at the crosses too much, but what I will say is that for me, we've got to remember that what this is, and this is the reason I put so much emphasis on price, is that every indicator is an indicator. It's, if someone's driving down the motorway and they want to turn left and there's obviously trees there, you're not screaming at them, honking your horn saying, don't do it, life is worth living, because they've obviously just left their indicator on, right? So it's an indication. It's not the reason it's called an indicator and not an absoluter is because it's not absolutely going to happen. It's an indication of what might. So for me, these are obviously the MACD is derived from the underlying, which is the price. So are moving averages. And I think that people often don't listen or learn enough, which is they go, okay, yeah, they're moving averages, but they don't actually know what that means. A moving average of what? It's a moving average of price. So they're always going to change after the fact. Whereas the same is with the MACD here. Now that candle hasn't closed. If you're waiting for it to close, then that might give you a bit more weight on that. But if that now moves up and closes the month, well, we got a couple of days left at say 11,000, well, then that right there is going to open up again. So just like when I look at the crossovers, and this is why I don't use them. I'm not saying they don't work. Everything can work in the hands of the right person. But for me, there's a lot that can change very, very quickly to open this back up. That's why I don't use the RSI. I used to use the RSI, but the MACD tells you exactly the same as the RSI for the way I trade. It's just more sensitive. It sort of ticks a little bit more. But I like to buy when indicators are like this, or if they're overbought or oversold. That's where 70 to 90% of my trades live, because that's when there's a good trend.
All right, cool. If there's anything else you want to say, now's the chance. Otherwise, I'll grab my screen share for a few minutes, and we're going to start to wrap up the show. I do end the show with specific questions. Think about them, and then I will actually ask them your probabilities. Don't answer them yet. Your probability that we will fall to around the low 7,000s or lower, I guess before the halving, the probability of us closing the year above 10,000, and your probability of a new all-time high before the halving. But I want to show something real quick on my screen share. When you were talking about the weekly chart, I actually should have asked you to repeat that. But when you were talking about the weekly chart, come on, move over. And you were talking about this last pullback before the all-time high, the one that only took 1 week and only fell 32%. And you said you felt like this was not enough.
Yep.
Right. And I'm with you. And at the time, because I do trade the sequential, that's one of my primaries. And this is what I was looking at. I was looking at a run up into $7,500 after starting the year around 700. So we were looking at a 10x rise. from like in less than a year. It was like in December, it was 700. And I was counting these days into this 9. This 9 was also a reversal candle. I called this to be the top for the year because it was already early November. Like I really didn't think it was going to go above that. And this was the short trade that I did right below the candle, right below the doji candle, right at 7,500 that I was calling for days prior. I said, hey, this is going to be a 9. There's going to be a nice short at 75, 7,600. This was the short. This candle messed up my trade because Jeff Garza canceled 2x. I don't know if you remember what happened that day. This was a stupid news event that people saw as bullish news, but I didn't because I saw that as now all the big blockers are going to unite together behind Bcash. Now the short trade got reactivated upon the break of these candle lows right here on this red 2 candle. And initially, if this stupid news didn't come out, I fully expected this to fall to at least $5,000, giving us that really good correction. But because of this news day, it kind of messed it up. And in hindsight, that's a beautiful support off of a setup trend line coming from TD and my 50-period daily moving average. But this was supposed to occur, a few days earlier, or in this vicinity, a lot closer to 5K. So I called the perfect top. I felt, other than the stupid news day, which killed the trade. And then I was slightly off on the bottom because it rebounded like $500 higher, probably because of this nonsense. So that was disappointing. It was like one of those things you called it right, but it was very difficult to profit from the trade.
Yep. It sucks when that happens, but that's life. I mean, if you're you know it more than most, it happens.
All right. So real quick, guys, before I do want to talk about my calendar and where I'm speaking next and where I'm traveling. And you're going to do a US tour in January, I believe, right?
Yeah, it looks like we're coming over to your. Actually, you're going to be in Australia probably.
And ironically, I'll be in Australia in January, most likely. Yeah, well, we'll get your travel. You don't travel that much. You're mostly in Sydney. Well, working basically. I'm the one that's traveling and evangelizing Bitcoin, which is why I have to be very careful about anything I say about altcoins. Hey guys, I don't really talk about my October much, but I will be speaking at this conference in London, CC Forum. I just want to point out there's a lot of good speakers there. And so go ahead and check that out. I will be coming to London. London is my second biggest viewing market. Australia is the third, by the way. So it's like US, London, then Australia, then Canada, and then Germany and Amsterdam. But check out CC Forum. A lot of interesting speakers. They're putting up their videos. I need to do mine as well. So if you look at the speaker list, it's jam-packed with a lot of good speakers. So some of the names will be debatable, right? But they'll be fun to watch. But there are some very interesting people coming to the event, and a lot of them within the UK. Maybe you'll recognize some names. I think there's some lords here or something. Lord Helms.
I interviewed a bunch of these guys.
Lord Helms, Lord JD Waverly. It would be great to meet these guys. I have not fully met them. All right. So that's my travel schedule on my calendar. Okay, so here we go. The questions that I just asked, let's get your answers. And we're going to go ahead and close out this stream. I know it's getting very, very late over there on your side of the world. So what is your chance from 0 to 100, the probability that Bitcoin will fall to the vicinity of $7,000? Could be a little bit. I mean, we're not going to, pull hairs here, right? Because we don't really have any, neither of us. So a pullback to the vicinity of 7,000 before the halving.
Look, from my point of view, the probability, I've got to say 50-50 right now. And the reason I got to say 50-50 is just because of my thoughts on that trend that I spoke to before on the weekly. If we break, and I'll tell you the numbers, if we break down, what's that low? 9,117, I think it is. 9,077. This is on the BitMEX chart. If we break down through there, we'll have a lower high and a lower low on the weekly. And then I can see us pulling back into that cradle zone on the monthly. But It's got to break down through that point before I have any hint of bearishness to me. That's why I've got to say 50-50, because like I said, we can also equally break up through the high of 12,321.
No, that's
continue on.
That's a great answer. So the follow-up is this. If you see price going to $8,999, what is your probability then that we can fall as low as 7 or lower?
65%.
Got it. Okay. So right now the price is $10,000, like 10,100. So let's say right now the price is $10,000. What is your probability that we close the year above 10,000?
My probability that we close the year above 10,000 is 60%.
Okay, very nice. So you're slightly more bullish than bearish for year end. And what is your probability that we can break all-time high before the halving?
When's the halving again? What's the date for that?
Like May 8th, around early May.
Oh, look, I think there's a very high probability of that. I would go as high as sort of 70%. I think we can achieve that. Of course, it's a very difficult market, and I don't like to do long-term sort of predictions around times, because there's so much that can happen. And that's what's so wonderful about this market. It's super dynamic. And I'm a trend trader. So look, I truly believe that, I mean, we're not far from it now. Let's not forget, we're at 10,000. We've only got to double our price right now. And that sounds like a lot, but let's not forget that since the lows of this year, or it was actually last year, to the highs of this year, we're up 340%. So this market doesn't sneeze at multiple 100% moves. So I think that there's a 70% chance that we'll break to new all-time highs before 8th of May next year. I've been wrong before, and I'll be wrong again, though. I want to say that.
Oh, wait, repeat that again, because I kind of interrupted you and I didn't hear it.
Yeah, so I think
no, just the last part, just the last sentence.
Oh, the last sentence. I have been wrong before, and I will be wrong again.
Okay, yeah, that's the part that I missed. Oh, wait. Okay, cool. And I don't normally ask this question, but just out of my curiosity, do you think the bottom is in? Do you think there is even, like, let's say, a 10% chance? There should always be a chance, right? But do you think there's like, what chance do you think that we can fall below 3,000? Is it like 1%, or is it closer to like 10?
Oh, geez, this is Bitcoin. So,
Right.
there's there's always got to be at least a 10 to 20% chance. But I mean, look, when we talk about a bottom, I always say which bottom. When we talk about a top, I say which top, because there's always going to be, in the life cycle of a market, lots of bottoms, and there's going to be lots of tops. Speaking to the charts and what I see right now, within this year being below 3,000, I just can't see it. But, look, it's really tough. It's got to be less than double digits percentage for me that we're going to go below that anytime soon. There's just so much happening in the space. There's so much growth. There's so much talent. There's so many things that are being realized. The Facebook, Libra, and all these centralized sort of platforms. I understand why they do it. It's absolutely bloody genius. If you can manage the content, manage what people do, eat, and the times they spend and what they spend, and manage the currency that they actually use, then you own them. And I think it's a wonderful thing for business. But the problem is it's centralized, so they can be slowed down. Bitcoin, more and more people are realizing you can't stop it. And it is literally power to the people. And I just don't see that snowballing momentum shifting so significantly that we will see $3,000 again.
All right. No, gotcha. That's cool. And I don't really expect it next year. Like, if it happens, I expect it to happen like within the next 12 months. I don't really expect it to happen after that. Because I think after that, we're in the clear. If it happens, and I'm with you, I'm in the low teens, actually. Mine is a little bit higher than yours. All right. We didn't get to the traditional markets, but maybe give us 30 seconds give us 60 seconds on gold and 60 seconds on, let's say, US stocks and Australian stocks. Just your overall view of what you're thinking going forward.
No dramas. Let me just pull up the futures chart here. I'm just having a look at it. So you just want me to have a chat to it? Why can't I get that up there? It won't show me the futures. Oh, there we go. Okay, gold. Yeah, it's pumped. It's a good trend. It's running quite nicely. I mean, you'd be.
All right, feel free to share the chart if you like.
Yeah, I'm just trying to find the right contract.
GC1.
Yeah.
GC1 exclamation point.
Oh, it is there.
You might have to do a pull down and then get the
Continuous.
Yeah.
All right, let me share. Which screen have I got? That one. Okay. Yeah, look, gold has, and again, here's an example of the market working well within that cradle zone. Yeah, back through here. It's in a great trend. It is moving very, very well. The daily is very strong.
Wow, beautiful green candle right there. Wow, that pierced the purple and then went back up on August 1st. That was very nice.
See, I don't like the way that looks now. If I go to the 12-hour here, you probably see divergence there. Yeah, we've got a higher high and MACD's. It's divergent. So like divergence doesn't mean that it's going to pull back. It just looks like it's lost a little bit of momentum there, which isn't really that surprising considering the sort of move that we've seen on gold lately. It is overextended on the weekly. It has had a history of doing nothing for a long time. Once it got out of this stage,
and it's coming up on a 62% Fibonacci on the bigger time scale. So keep that around 1600.
Look, I can remember trading through this period here, and it was just glorious. And then it went quiet for a number of years. Gold is back, baby. And if we continue to see more unrest in different parts of the world, I think gold is obviously going to be another big move. Just to give you some perspective on the move, this year it's 23%. I know that's not just this year, but 23%. 23%. Bitcoin did 340%, and that is why I like trading Bitcoin.
All right, and very quick on the market. So SPX and then maybe ASX.
We'll just go SPX because the ASX isn't really even that interesting, to be honest.
I know you're in Australia, so I figured.
Meh. Oops.
Oh no, that is not. That's the euro dollar. You just SPX cash. You're in futures.
Oh, it's because I'm in the wrong area. Yeah. Right. Now, here is an interesting looking market to me. Okay, let's look at a bit of history first. Have a check back here what happened after a really strong run up. We did have a bit of a wild period. We had a wild period here. We've had a bit of a decent pullback here. But let's go back a bit further to where we did. I mean, look at that run. Look how long that's been going. It doesn't even capture all the data. Check that out. That's crazy, isn't it?
Well, you're on daily. If you go to weekly.
There we go. So let's go back to this period here. I like history. I like it a lot. This is what I was saying before, right? About the FTSE at the time. How we saw the high. Look at the divergence on that high. So the higher high in price, the MACD's got a lower high, and then another lower high. And most people would call it a head and shoulders top. I just look at the trend. Don't need to know all the names if you know what a trend is. And then we collapse. Now, if I just jump forward, we're starting to see a bit of heaviness here. And what I mean by that is if you hold your arms out long enough horizontal, if you find to start off with, they get heavier and heavier and heavier and heavier, and then they'll start wobbling. Then they fall. Now, if you look at this market, it has been strained since back here in January. This year, this market has been strained. Look at this beautiful trend through here. Look at these pullbacks into the cradle zone. Then we got these big candles, messy. There's a higher high, there's divergence. There's a new higher high, and it's flat at best. Oh, it's looking pretty spicy right now, and that's why I'm putting money into these other accounts that I've got because, look, I'm not suggesting it's definitely going to happen, not at all. But I mean,
but you want to be there if it starts to fall big time.
When it starts to fall, it is going to fall. You typically have 7-year cycles. We're on our 11th year. That is not natural. That is not normal. I don't see that much has really changed.
I can debate you on that. We're going to save that for our next show. I really want to debate you on that because I think that the market is going to go significantly higher. And we'll definitely talk about it.
Yeah, fair enough. Well, just based on the charts, I mean, it's not clean. I like this. Yeah, this is where I trade. I don't need to catch the bottom. I don't need to sell the top. I take the chunk in the middle. And right now, there is no middle to take because it's a bit messy. I think that the next man, look, we could stay bullish, but I think that we're going to see a correction. And look, I mean, you can see it here. Look, smooth, yuck, smooth. Now, this yuck that we saw back here, that might be the yuck that we see here. it might not be that yuck, if that makes sense. So it needs to sort its shit out right now. The S&P looks a little bit confused and a little bit uncertain. And you know what uncertainty means in markets? Uncertainty typically means and adds to more selling.
Yep.
Big ugly range.
Yeah, that's the other thing I try to explain to people recently on videos. In order for the market to keep going up, you need new money coming in. In order for the market to crash, you just need people to stop buying. No one has to sell. There's no need for this magical short seller. You just need people to say, I'm not paying these prices anymore, and everything crashes.
Exactly. That's it. It's a supply and demand market. If you bring trading and markets back to their most pure, simple forms, there is a war between buyers and sellers. Whoever there is more of will win. That doesn't mean that there needs to be a lot of people trying to sell. It just means that, things need to shift. And if we see the shifting tide, that's where the opportunity lives.
All right, we're gonna close out. I'm gonna let you get back home from your office and go to sleep. So once again, this has been Trader Cobb on my channel. Just do some closeout thoughts. Pretty much your intro, but as an outro, as I pull up your links of where people can find you, and these links are in the video description.
Sure. Thanks for having me, mate. Appreciate the time, and hopefully the viewers have learned some stuff, and I've introduced myself to them in a good way. Look, I've been trading for 13 years. It's a checklist-based trading strategy. I go to tradercobb.com. There's a whole bunch of free stuff there, free courses, free content. YouTube's got a bunch of stuff. You can very, very, very quickly decide and see that I do know what I'm talking about. I have been doing this for a very long time. I have a very long history. I've worked with some of the biggest names in the business, and it's a pretty safe bet if you do want to learn how to trade another type of strategy. I know, Tone, you've got your own way of doing things. I respect you for what you do. We all have a different way of doing things, and if it relates to you, then get across it. And also jump on the Trader Cobb Crypto podcast. I've had some pretty good stuff on there. It's been a lot of fun. Lots of guests, and I do a daily little run through of exactly what's going on each day from my point of view. So if you want to learn to trade and you think that the checklist-based trading strategies would be something that you would benefit from, get across and get on the free weekly video newsletter and suss it out from there.
All right, very, very cool. And once again, you guys have been watching the Tone Vays stream. You can check out my calendar of all my travels. In about 2 weeks, I'm going to kick off my travels by speaking at the Black Blockchain Summit in Washington, D.C. Yes, it's exactly what it sounds like. And after that, it's off to Europe for about 5 weeks, and then Asia. So you can keep an eye on that. No new workshops coming up at the moment. I'll see which countries I want to do it in. Otherwise, it's webinars. You can purchase them on demand. The options one just took place this past weekend. If you want to support this channel, check out the affiliates page. And also the indicator is on the indicator page. And I keep forgetting to mention, but in all of my YouTube videos, there is the free alert notification service. We don't have a link yet. It will become a paid service eventually, but for now it's free. So you can join the Telegram channel for the alerts on all 9s and 13s across most popular assets. So go ahead and check that out as well. All right, guys. Cobb, thanks again for joining me, and hopefully I'll see you soon on this channel. Once again, I'm continuing the rework of this trading channel in order to bring on more talented traders to get their take on the markets. Thank you so much, guys, and I will see you all on the next episode.
Cheers, mate.